All righty. How are you guys doing? And will I be able to see people or it's just no?
It's you, just you. I think they can see everyone. You can see Charlene and also me. Am I right? Yes.
Yeah. Okay, perfect. Hello, my name is Charlene Quaresma, and I am a financial advisor. And so I was hoping that this conversation can be pretty fluid today. I was going to do just some high-level discussions on what's happening in the market, how this is unprecedented and how it's not. Different things that we could look at as far as what retirement, like what your retirement accounts look like, as well as just some budgeting or some things on what you can do during these times now. Given that I can't see everyone, there is a Q&A chat box if you want to add some either questions or some things that you want to make sure that I'm addressing. So there's a lot of, I call it financial porn. There is a lot of financial articles and talking heads telling all types of things. And so I want to make sure that we're gearing it specifically to the things that you want to hear about. All right. So I'm going to share my screen here real quick. All righty. Can you all see my screen?
Yeah.
Perfect. And then I'm going to move faces here because now you're all very small. So you'll be monitoring the chat, the questions.
Yep.
Perfect. Okay. So first I want to kind of give you some high level and just some like historical context to this. So this is here showing you the stock market performance after macro and epidemic events. Now, the reason why I want to start here, and I just also want to have this disclaimer, in the same way that a lot of people are talking about what's going to happen here in the next 12 or 18 months, what unemployment's going to be doing, what the market's going to do, please know that take everything that anyone says with a grain of salt, including myself. And the reason why I say that is I'm not a witch. I have no idea what the future is going to hold, but I wanted to gear this conversation a little bit around looking to the past to maybe make some assumptions about the future. However, I'm also going to be talking very generally. So if you want something that's specific advice, they'll give you my contact information and feel free to reach out. I'm happy to schedule a phone call with you for any reason regarding some of the things that I go over today. So when we look at the market, and anytime we're talking about the market as a whole, obviously different asset classes are doing different things. The economists always look at what the S&P is doing. And the reason why we look at the S&P, because that is basically large US companies. So when we think of the global economy, the US is the largest of global economies. So that's where we use as a metric. So this is again showing you macro and epidemic events throughout history. And so yes, when people talk about that this is unprecedented times, it is and it isn't. What's making this feel very unprecedented is a few things. One, there's a lot of things happening all at once. Okay, so that's first and foremost. The other piece of that is Donald Trump is our president, and that's really unfortunate. And that's not just a joke or a line. Anytime that the world is experiencing some type of global crisis, they typically look to the United States for leadership as well as Great Britain. And when you have Boris Johnson and Donald Trump as the leaders of those, it really doesn't provide a lot of faith and credibility into the global economy because we don't have those typical leaders. Now, the cool thing about the time now is that female leaders are actually getting a lot of props because they're really the ones that are handling this pretty well. And so hopefully that will be a metric of what we can expect moving forward. But that does cause a lot of anxiety when you have the US and Great Britain not only not leading, but really their arrogance and ignorance is really affecting the populations as far as on the curve, so something to keep in mind. So that is one piece. The other piece that causes a lot of just like crazy, unprecedented anxiety is that we live in a 24-hour news cycle. Not only do we live in a 24-hour news cycle, even trading in the stock market can also be done 24 hours a day. So you can actually put in orders in the middle of the night. There's the futures market, which then dictates what's going to happen when the stock market opens here in the US. So there's a lot of noise and then people reacting to that. So when I say there's a lot of things that are happening, so if we look at three things where I think are very similar to what's happening now. It's like a cross between the stock market crash of 1987, the September 11th attacks, and then Lehman Brothers. So let's look at all of those separately. So first, let's look at the market. Also, one other thing to just provide some context to. The market and the economy are two different things. Just because the stock market collapses or goes down doesn't mean the economy collapses, and vice versa. Also, when we look at things like housing, for example, the housing market doesn't necessarily follow the stock market. And the housing market also doesn't necessarily follow the economy. So for example, if we look at the recessions over time, housing actually went up in all of those except 2008 and 1991. So when we look at, and I'm bringing this up because there is a lot of noise that is out there, but not everything is correlated, okay? So just something to keep in mind as we kind of go through this conversation. But let's talk about the past and what's going on today. So the reason why I say it's a cross between the stock market crash, September 11th, and Lehman Brothers is why. In 1987, there was, the stock market dropped, as you can see, 20% in one day. Now, a bear market and a bull market, a bear market, so the market goes up 20% in a year, and a bear market, so the market goes down 20% a year. 20% is the cutoff. So when someone, if it's, let's say it's 15%, that means that you're bearish or bullish, but not quite a bear or bull market. But on October 19th of 1987, the market actually hit bear territory in a single day, dropping 20% in one day. Because that happened, FINRA, which is the regulatory agency of the New York Stock Exchange, put in something that's called a panic switch. And I'm sure you've heard about this on the news. So if the market drops more than 7% in one day, a panic switch is thrown, which stops trading on the floor for 15 minutes. And it basically is a way to get people to cool their jets, take a walk, take a breath, and stop selling. Because that panic selling just becomes self-fulfilling. So as people start dumping money out of the market, then more people are like, oh crap, I got to dump more money out of the market. And they're like, oh my God, I got to dump more money out of the market. So people start reacting to all of these pieces. So they created this panic switch in 1987, and then they didn't use it until 10 years later in 1997 when Japan was going through their recession. And then they never used it again, and then they used it 4 times in 2 weeks in the month of March. Specifically, they used it twice in one day on another Monday in March when the market dropped 20% in one day. So we are currently in what's called a bear territory. So the market is down 20%.
Charlene, what caused the crash in 1987?
Savings and loan scandal.
Right. And so what you're describing is people panicking and making a lot of moves very, very quickly, right? And then there's now this mechanism in place to tell them to, whoa, hang on a second, maybe we don't need to make all these moves so quickly, but people are still doing that because they see other people doing it. Right.
And so that's really what it is. That's why they call it a panic switch. It's to stop panic selling. What you see, so now, and we'll get into that a little bit more on the stock market as far as on when to take money out and when not to, but I can tell you, if you're not retired right now, you don't need to take money out of the market. If you're not actually living off of your assets, I get that, maybe your 401k is down, but they're paper losses. Just don't look at it. And I know that sounds silly, but just don't look at it because you actually didn't lose that money if you didn't sell it. The minute you sell it, you now make those losses permanent. And so we'll talk a little bit about that in a moment. Now, again, past performance doesn't dictate future performance, but typically when the stock market drops that drastically, it usually comes out pretty quickly as well. And you can see dropped 20% in one day, then it was up almost 7. 3 months later, it was almost 11 months. Fast forward a year later, it was up 23 points. And fast forward 10 years later, it was up 319. So when you look at investing in the stock market, it is long-term, okay? So you're not going to put your emergency fund here in the stock market. And we'll talk again, as far as what to do now with reserves and things like that. The stock market is a long-term play. So if you're not retired right now, or you're not within retirement, I'd say within the next 3 to 5 years, this does not, like what's happening right now, who cares? And I don't mean to, be simplistic about that, but you're not losing money if you don't take it out. Okay, so we're clear on how that works. But so that's kind of what the market is doing now. You're seeing just really huge changes in portfolios right now. So I haven't looked at it since, a few hours ago, but the stock market is at right now. So the Dow is at 23,000, almost 24. Before all of this happened, so if we were to look at the end of February, and February 29th, the market actually was at 29,000, so it was an all-time high. And now it's down to almost 24,000. When it dropped, where the market, they did that panic switch twice in 2 days, the market was down 18,000. So that was, the market was down almost, I think it was like 35% total from where the high was. Also, with the stock market, the other reason why it's a little bit of a shock to the system is we've been on a bull run for the last 11 years, and usually the stock market goes down into bear territory about every 5 to 7. So again, if we were to look at the stock market going down and then going back up from 1957 on, you can see there's these huge economic expansions and then these little dips, and then huge economic expansions. And so again, here's that 320%. Here's the dot-com bubble, which I remember very much because I lived in San Jose at the time. And then market went back up, and then you have the global financial crisis, and then you can see this large economic expansion. So this is normal, I guess is what I want to say. The huge swings in it have more to do with, again, those things I just mentioned. So stock market, we got that aside. So the feedback I always get from individuals is like, yeah, but Charlene, we've never had to like not go to work and close our doors and not, and stay inside. True, I can't think of any time in recent history that has ever happened. But I will say, after September 11th, people didn't have to stay in, but people stopped going outside. I don't know if you remember that, but again, downtown Manhattan and the financial district was leveled. So a lot of those businesses were gone. For several years, they could not open. But not only that, we were already coming out. I mean, during that time, we already experienced a dot-com bubble in 2000. And then we had September 11th in 2001. And you can see this slow crawl for it to come back. Well, a year later, the market was down even farther. And the reason is we entered a recession. And we entered a recession because though people didn't have to not go to bars and restaurants, they did stop going to bars and restaurants because they were scared of being around large groups of people because they thought they were going to die, which is very similar to what we're experiencing right now, even though this is forced. The economy did take a hit. I know very vividly because I graduated in that recession in 2002. And what the government's response to that time was, because GDP is so dependent on consumer spending, which is why they're talking about a recession right now, is because if people don't go out and buy things, then our economy doesn't grow. We are a consumer economy, not a manufacturing economy. And so when people don't go out and spend money, our economy does go down. And so the government's response to that was, and I don't know if you guys remember this, but it was get back to normal, go shopping. You remember the go shopping campaign? That's what happened after September 11th. And that go shopping campaign, basically whether people had money or not, which a lot of them didn't because they were playing in the stock market of the dot-com bust of like, again, you can't lose, right? People already lost money in the market, didn't have money. And so they then started debt leveraging, buying things on credit cards. And then that still wasn't enough. So then the government started trying to give free or cheap money away with huge balloon payments. They encouraged people to buy houses without down payments, with variable rates that were low entry and then balloon payments. So the economy was built, if you look here, this economy, first of all, wasn't very big, but it was also built on a house of cards. Both companies and individuals and banks were debt leveraging, trying to get spending moving because people were not wanting to spend money until they started spending money artificially on credit cards, which then led to the financial crisis of 2008. I want to emphasize right now, what we are experiencing right now is not a financial crisis. People are taking a financial hit, certainly because of the coronavirus. It is a medical crisis and a lack of leadership crisis. Those are all very true. But the banks learned their lesson in 2008, and because they had to with Elizabeth Warren and all the financial regulation that they put in place, they learned their lesson and had to keep stronger reserves. And interest rates have still remained low, but banks have been they've been more strict on lending money. And because of that, from 2008 to now, both companies and individuals cleaned up their balance sheets. So they had more cash reserves and they paid down lots of debt. I just wanted to kind of throw out here, as you guys are asking questions, Catherine, if you can cut in, just because with my screen share, I can't see any of that stuff.
Oh yeah, totally. The only question we have is a hold for the end at this point.
Okay, perfect. When I see little things, I was like, I'm not ignoring you, I promise.
No, you're good.
So what happened from 2002 to 2008? Again, financial house of cards, once that collapsed, that did affect a lot of people. So when we look at the Lehman Brothers bankruptcy, that was a domino effect then, as people started losing their homes, started losing their houses, started losing their jobs. So the high unemployment that you are seeing now, a lot of that is forced. And a lot of those individuals, once we can all go out and play, are going to get hired back again. So this high unemployment, in my opinion, I don't want to say it's short-lived, because I think it's going to last a lot longer than we think it is, but it's not the same thing where banks and companies went out of business because they didn't have access to capital or money. The reason why a lot of these people are getting laid off is, as a small business owner myself, which I am in a position where I have kept my employees, in fact, given them raises and things during this time. But a lot of companies, if there's no revenue that's coming in, then the business isn't sustainable to keep paying people, because then that would destroy the business and they can't come back. I don't want to sugarcoat it. There are definitely businesses that are not going to come back here. There are definitely jobs that are not going to come back here. I want to just emphasize that it's not the same thing as 2008, where that was a global collapse, where this is a global shutdown. Those are very different. Now, different restaurants, I'd say, and again, I don't know, but my gut tells me that 20 to 30% of those businesses are probably not going to come back. They are innovating at this time, which innovation always comes out of times like this. So yet, for example, people lost their homes, and that's not a small thing to think about in 2008, but what came out of that was Airbnb and sharing homes and having revenue built off of houses. So innovation income came out of that as people started looking at housing differently. Like, I work with a lot of millennials, and a lot of them don't want to buy houses because they don't feel they need to. It's not because they can't. It's because they're like, well, I can just kind of move around in different places, and I can go where the job goes, and that makes me feel good. So innovation and mindset changed around that. People had their cars repossessed. That's totally true. But what came out of that was Lyft and Uber and different car sharing. So innovation does come out of these times. But again, I don't want to, sugarcoat this and be in denial about it. There are definitely businesses and individuals that are not going to come back from this. And the way that I see it is, if you are really, really struggling financially going into this is going to be a hard road. And when you really need to start figuring out and getting help and having a plan. This is not a time to put your head in the sand and say that, well, shit's unfair, because shit is unfair. But this is a time of, like, it's a triage situation then with your finances, and get help. And again, happy to help offline. If you were fine going into this financially, you're going to be fine coming out of it. There may be some hard road, or maybe there's going to be, again, be some level of sacrifice that's going to come along with it. And it's not going to be rosy, but you're going to be fine. Okay. The important thing is not to make permanent decisions from temporary problems, because what's happening right now is temporary. And if you're in a position and you have a plan, you can have permanent opportunity from these temporary problems. And that's the way to really look at it. And so, but if you were struggling financially going into this, it is triage time, all right? It really is putting a tourniquet, stopping the bleeding where we can, cutting some things off, and then sewing it up and starting anew. And I want to be very clear about that, because I don't want to, I don't want to come in with a level of naive optimism, but I also don't want to portray so much cynicism, because it's not though there's anxiety, this is not the end of the world. And I hope on what this is coming, my hope coming out of it, and again, I have no idea, but we can see with the right level of leadership and I'd say citizen action, it's time for us to be citizens again and stop being consumers. The news calls us consumers for a reason. Politicians calls us the American consumer for a reason. It's because we have allowed ourselves to build an economy off of spending. All right? And it's now we need to build an economy about us demanding our rights as citizens. And we can come to this place because now is the opportunity. And that's, again, just more my optimism. But if we look at what, everyone keeps talking about the Great Depression and all this shit. Oh, sorry. I said we're going to be PG-13. Everyone's talking about the Great Depression, and it's really easy to talk about that because after the Spanish flu came the Great Depression. But what came after the Great Depression? We had the New Deal, and we built the middle class. We had a serious influx of capital to now support the middle class, because I think that they're realizing you can open up all the businesses that you want, but if people don't have money to spend, you ain't going to be in business. And people are really showing what this pandemic has been able to give us, the opportunity that, you and I have all known, because if you're related to Rose City Rollers, you guys are badass people and know and have, heart. But what you're seeing now and what the world is seeing, especially the US, you're seeing the injustices of the world, that now it's like, okay, the essential workers are essential and we need to pay them. Teachers need to be paid. All of these reinvestments of the things where a lot of the privileged class has taken for granted, they're realizing that stuff does not work if we're not looking at it from a bottom up. Even people like Mark Cuban are talking about trickle up, that trickle down has not worked. Everything from the 80s on that has really created this inequality on all levels and lack of opportunity. The conversation is now different, and it's also just up to us and the leaders that we put in. But you're starting to see a drastic contrast of what has worked and what has not between blue states and red states and the economy, that it's now gives us really the space that of just to demand action. So that's a little bit more on a philosophical standpoint on where I do feel that we have the opportunity to go. But ultimately, I wanted to kind of share the little bit of the history of the market to be able to say that. Do you want to stop for some questions here for now, or otherwise I can?
The questions we have so far are very specific to people's situations, so I think that you can continue on.
Okay.
Address those maybe in the last 15 minutes. Okay,
so let me just see then coming into then a couple other things. So let's just talk about money coming out of the market real quick. When I was talking about, again, now's not the time to make permanent decisions off of temporary problems. This I really love seeing, because I use this all the time. This is showing the same situation, but 3 different behaviors. Because again, we're all living, I think someone put it, well, it's not that we're all in the same boat, but we're all in the same storm. So I really, again, want to emphasize that everyone's situation is different, but that doesn't mean that you have to drown, okay? So I get that some people are on a boat, some people are on a raft, and some people are just treading water. So again, I don't want to deny that the different experiences, but it is what it is. So now it's like, what are you going to do about it? So this is just showing, again, money in the market. If you had $100,000 invested in 2008, and then the market bottomed out in January of 09, if you left it in there and didn't touch it, over that same 10-year period of time, you would have made $138,000. There were a lot of people, and this is what you're seeing now, it bottomed out and then they took it out and then they kept it for a year. And as the market started going back up, they dumped it back in. Well, if you did that, you made $155,000. There's also a lot of other people that thinks that they were so smart, and I just love having conversations with them. They're like, well, I took all my money out of the market and I didn't lose anything. Actually, you lost and made those losses permanent, $55,000. So again, when we're looking at money that's in the market, it's long-term. Just don't look at it and it's fine. If you are experiencing, so coming now into what are some of the options? And I can send all of this stuff to you guys if you wanted to then share it afterwards.
And we're recording as well.
Okay, perfect. So this is showing the CARES Act and the Family First Coronavirus. Again, there's a lot of noise that's out there. I've been collecting things from different CPAs, attorneys, fund companies, and building up like a book of resources. So this is from my CPA because, as you can see, there's a whole tax section. They basically summarized everything happening. But what I wanted to show here is on retirement plans. So if you have a 401k, and again, this is assuming you don't have an emergency fund, which we'll go into in a moment. But if you really do not have access to cash right now, and you do have a retirement plan and you've lost your job due to a corona-related event, meaning like that you got laid off, you got sick, your family member got sick, something to that effect, that the money that you were having coming in is no longer coming in, you can take up to $100,000 out of your retirement account, and you will not be subject to the 10% penalty. So if you take an early withdrawal of 401k now, I mean, just before this time, you would pay a 10% penalty if you were not 59 and a half or above. So now the case is they're waiving that 10% penalty. So if you do have money in a retirement account and you actually do need money, I would look at your retirement. Again, you got time to build it back up. Right now, it's about having your reserves is the most important thing. Also know that you will be responsible for the taxes, but you are able to put it back into your retirement within 3 years and avoid some of those taxes. So just know that that is an option that's pretty great. If you are retired right now and you don't want to take money out of the market, because obviously then you're making those losses permanent, and if you're over 70 and a half, you do not have to take your required minimum distributions. So in a retirement account, once you're over 70 and a half, now it's 72, you got to take that money out to meet your required minimum distributions. If you're in a position where you don't need them, you also don't have to take them without tax penalties. So I wanted to at least share that piece. So let's talk on what to do now. Here's the opportunity. And again, I can send this to you. This is something that I use when building plans for my clients. Here's the good and bad news. The good news is, I mean, it's actually good and bad. Good and bad news is you're not going out, right? You're at home. And so what you can really start getting clear on, and this is the good news about that, what are your actual bills? What is that monthly nut? And what I mean by that is, what are your fixed expenses? What are your housing costs? What are your loan payments? What are your transportation, your taxes, all of those pieces? Now is the time to really see, what does it cost to be me on a monthly basis without any fluff, without any glam? You're not getting your nails done. You're not getting your hair done. You're not getting massages. Maybe you're doing some Uber Eats and things like that and Grubhub because you want to support local businesses, but you're not going out to eat right now. So what does it take to be you on a monthly basis? Now is the perfect time to truly figure that out, because most people, when I meet them, have no idea. They just know that money comes in and money goes out, and I don't have enough. I find no matter how old you are or how much money you make, in the absence of having some parameters, you will always spend what you make unless you are just traditionally a very frugal and save thrifty person. So figure that out. Once you know what that monthly nut is, Can you then contact some of these places to see what their policies are around making payments? So looking at your car insurance, if you're not driving right now because you're at home, can you have a pause in your car insurance? Make sure though that if that is the case, you're also parked in the garage or because if your car does get stolen, maybe you're not driving it, but you still want to have insurance. So see what their policies are. Can you stop making payments during some of these times? And then what are the penalties? And get everything in writing. I don't care who you talk to on the phone. I'll have them follow up with an email and have specifically their policy. And whoever you talk on the phone, get their name and whatever their number for their code or whatever it is. Get everything in writing. None of this, I talked to someone named John, have the date and the time and who they were, and then have them follow up via email and get it in writing before you take any action. You can do that with some water bills, some cell phone bills, some insurance payments, all of those things that there are different policies. I know within my own company, all of our life insurance and disability, they're allowing grace periods, which are usually 30 days now to 90 days. And if we reach that 90 days, they're finding ways to work it out, because during this time, the last thing we want people to give up is their disability and their life insurance, because we're in a medical emergency right now and you just don't know what's going to happen. So that's one thing. When it comes to your car payments, your student loan payments, student loans, if they're federal, they're doing either interest only, or they're doing 0% interest, or they're letting you push and defer the payments out to October. Again, talk to your loan companies, but then get the specific details. Are we talking about a deferment? Are we talking about a that you're deferring it, which means it's going to get tacked on the other end of the loan? Or are we talking about forbearance? Here's what people need to know about forbearance. Forbearance does not mean that they're tacking on that loan at the end. So if they're giving you 90-day forbearance, that doesn't mean now if you had 15, let's say you had 36 months left on your loan, that now that becomes 39 months. Okay, I want you to really understand that. Forbearance means that we're going to forego these payments for 90 days, but then you will be hit with a balloon payment, okay, at the end of those 90 days. So if you can't pay your mortgage now, the chances are you're not going to now be able to pay 4 months worth of mortgage in 90 days, okay? So if your bank is offering forbearance and you're going to do that, then I highly, highly recommend that you are putting that mortgage payment aside because you're trying to free up, because you want some, certainty that you're like, okay, I just don't know where my job's going to be. Forbearance only makes sense if you're waiting on some unemployment or you're waiting on some money that's coming in. Okay, but forbearance should not be a recommendation and a strategy. If you are struggling to pay your bills now, you're going to struggle even more paying them later. And now you're in some type of, they could put foreclosure on you. So that's what happened to a lot of people in 2008, is because the banks offered to go into forbearance, and then when it was time to pay the loan, then they didn't have it, so then they went after your property. So please know that forbearance should be a last I can't even think of the word, but just don't do that. Unless, again, that there's money coming in the next month or two that you'll be able to have those dollars. That's first and foremost. If you are currently working and you're still nervous about what's happening right now, if you still have the income, I would explore, can you refinance your house? Can you do a home equity line of credit? Can you take cash out to be able to have a reserve? Right now, the most important thing is making sure, again, what are the bills that you have to pay? Then can you not pay them right now without any penalties? And then where can you start shoring up some reserves? So what does your emergency fund look like? Obviously, if you haven't met with someone like me, maybe you don't have 3 months of your living expenses in cash, because that's what I always make you do before I let you invest money in the market. Because you got to do that first. The market's going to do this. You always want to make sure that you have 3 months of your living expenses. Now, I know that that's not always easy. So if you don't have that now, Where are places that you can shore up dollars? Do you have access to 0% on a credit card, that you can pull at any time? Does it make sense to access that capital at 0% and then if you're going to do that again, have a plan. When are you going to pay it back? How are you going to pay it back? Can I have a year? Because obviously if it's 0% for a year, you can pay minimums on that, but just know that now you owe that money a year from now. So have a strategy around it. But if the intention is, well, I don't have work right now, I don't know how long it's going to be, but I feel comfortable that once my company, opens up and we're able to go back to work and things like that, I'll have my income, then I'll be able to pay this down aggressively. Right now, it's your time to be a little squirrel. Just start taking in all those little acorns, okay? And what I mean by that is if you're not going out to eat, well, start shoving all that money in savings. Again, I don't care who you are or how much money that you make, because I work with a lot of people of varying incomes. We all spend money on things that we enjoy but don't need, and that we want to enjoy them now but can't. Find out what that money is and just put that in cash, okay? I get a lot of questions of like, well, the market's down, what stock should I buy? Who cares? Right now, have cash. That is worth way more money than trying to make 20% on the $1,000 that you want to put in the market, like in a few months. You know what I'm saying? Like right now, you want to make sure that you have a long-term plan of not touching money that you already have socked away, not looking at it. The main thing is have a 90 to 180 day plan. Because, I don't know, I'm happy that we live on the West Coast as far as what that we have, leadership between the coasts. But my gut honestly tells me that things are going to be really weird, like as far as a slow roll and us not being able to do things. I think honestly, at least until January 2021. I think that, businesses are going to start reintroducing things probably into the fall, but that's probably where we may get hit with a second wave. So I want you guys to be, again, not realistic, but a little bit err on the side of caution on what happens if I can't go back to work for 6 months. Now, I definitely think that the government is going to continue to infuse cash into the market, but there's going to get to a point where it's, okay, what's their end game to pay it? But I do think that there is going to be continued federal assistance coming into this. They did not act fast enough in 2008. Right now, they're almost acting too fast without a plan around it. But you're going to start seeing they're going to continue to learn, and they're realizing that all of us essential workers are essential to the economy. And if we don't have money, none of those businesses are going to come back, all of their businesses. So they're seeing that. So again, you are going to see continued stimulus, and hopefully there'll be more and more programs around that. The communities are coming together. During times like this, you see so much beauty in humanity as well as the ugly. But there is a stark difference, and people are going to choose their sides. And I think that the good is going to win. And maybe I'm just being like idealistic, but I really feel that that's the opportunity. So with that, I will open it up to questions. I'm going to stop sharing my screen. And was this okay?
Awesome. And Charlene, can you see the questions at this point, or should I read them out to you?
So I see comments.
Comments. And then a bunch of people are texting me personally about how much they love you. I don't know why they're not telling you that.
Oh, well, you give them my contact info. I'm happy to help and be a resource, even if it's just a phone conversation. All right. So spoke to Lynn, was informed the local housing market is still relatively more sellers. So,
everyone can't see it, so let's read the question first.
Oh, I'm sorry. So it says, I spoke to a lender recently and was informed that the local housing market is still relatively warm and a seller's market. What's the expected behavior from there? So again, I'm not quite sure. As I'm not a witch, but I can tell you, I work with a lot of people in real estate, and I'm also I sold real estate as the market collapsed in the Bay Area, so I'm very familiar with it. But I can tell you, as long as interest rates remain low, people are making decisions right now. So how long that will last, I don't know. But I would say only sell your house because you want to, and you have a plan, like that was already the plan. And then only buy a house if you can afford the payment and you can see yourself being there for the next, I'd say, 5 to 7 years. So if you're just looking for a deal and you're trying to time the market, I'm not a big proponent of timing the market. The best time to buy a house was yesterday. So it really comes down to what your actual plans were initially. I can also tell you that the housing market and recessions, like as I mentioned, they don't coincide. When there's a recession, which we will hit a recession, I don't know how long it's going to be, but there will be a recession for sure. That doesn't necessarily correlate with what housing does. So housing has actually typically have gone up during recessions, maybe not as quickly, but outside of 1991 and 2008 through 10, that was the only time that a recession and housing coincided in recent history. But I would definitely say that you're going to see where sellers are definitely making decisions I'm seeing right now because they're afraid of what the future may hold. The thing is that there's a lack of inventory right now. So if you want to sell your house, now is a really good time to sell because there's not a lot of inventory. Once people are starting, because once people are just, they're waiting for the, is it okay? Should I put on the market now? Is it okay? Is it okay? Make that decision based off of what you wanted to do in the first place. Because I could tell you there's a lot of buyers right now. A lot of my clients, I have 3 clients that are in escrow right now, and I work with a lot of realtors, and they are busy. So if you are looking to sell, now is a really good time if that was your plan in the first place. But don't just sell because you're trying to get out of the market before there's some type of like crash, because who knows, there may be one, there may not be one. But there's a lot of buyers that are bidding up on houses now because there's a lack of inventory.
Yeah, Charlene, let me piggyback on that really fast.
Yeah.
When you say interest rates are low, can you give us about 30 seconds on that?
So interest rates so the Fed dropped the rates to 0%, which means that's the rate that banks get to borrow from each other, from the Fed and from each other. And so then they are basically, they then figure out what's the interest rate for adjustable rate mortgages, 15 years and 30 years. The rates fluctuate so quickly. So again, still connect with a mortgage broker. I'm not going to speak with authority on it outside of the fact that I've been seeing 3.1 to like 3.7. If you're at 5%, now is definitely a great time to refinance. If you're like 4.1 or 4.25, explore it. But again, when you're going to look at that, it really is only going to depend on, are you going to take money out because you need it? Are you taking a HELOC because you need it? But if you're just looking to get that like lower interest rate, then I would really look at how long are you planning on being in the house. Because if you're going to restart another 30-year or 15-year because you're trying to get like 0.5%, it still costs money to do the loan. And then you got to figure out how many years does it take to recoup. And then of course, since I don't know what housing is going to do, if you take out too much money in the house, again, you just want to make sure if you're buying or refinancing, be okay with maybe staying in that house for the next 5 to 7 years. Because if the market does go down, you don't want to now be upside down and now you can't sell. Because the point on that with 2008 and 2010, and kind of to what I said about the stock market, if you bought a house at the quote unquote height of the market in 2008 here in Portland, if you didn't sell it in 2010, you didn't lose money. So even if there might have been a time that you were upside down, if you never sold it, doesn't matter. If you sell it now or if you sold in 2012 or 2013, you made a shit ton of money on that. So again, it's not about what the market's going to do this. It's about your timing of things. So I always say, especially if you're going to buy a house, buy it because you want it and you're okay with staying there for the next 5 to 7 years. Sell it because you're okay with that was your plan in the first place, not because you're trying to like time to squeeze out an extra like $20,000 or something. Do you have any projections, insights to other businesses outside of restaurants that won't recover from this? Yeah, so, and again, I'm not sure. The restaurants, I just know because they operate on such small margins, and because if they're closed, they're going to have an influx of capital to start up again, because they're either going to have to start with a very small menu and build its way up, which is one option. But if they're trying to come back to what they were, you got to buy a lot of food all at once as opposed to the staggered of what you need. So that's why they just operate. Any business that operates a lot on low margins is going to be pretty hard to come back to. Other places, I would say, I think if there's anyone that's in commercial real estate, whether you're a commercial real estate developer or in commercial real estate, like you rent those places, I think that they're going to get hit, because I think with a lot of people working virtual, companies are realizing, do I really need a space? Can I operate remotely? I rent an office downtown for me and I have a suite with me and my 2 employees, and I spend about $2,000 a month. Do I really need that space I still need to be there because I see my clients, and I do virtual stuff, but I still love the personal, aspect to it. But do I need to have a suite? Could I just have an office? Does my team really need to be there? Could they continue to work from home if they wanted to? So those types of things you're shifting. And I think that different businesses are certainly looking at that from a commercial standpoint. So if anyone's in commercial real estate, I would say you're going to want to pack up your buildings with things that you can't do remotely, like hair salons and gyms and things like massage, and acupuncture, things that you have
roller derby.
And roller derby, things that you have to have direct. You can't just do it virtually. That's one. Another, I would also say that different hotels, hospitality, travel is going to get hit pretty hard. And then also a lot of the clients I work with a lot of creatives. So I work with a lot of people in real estate, and I work with a lot of people in creative agencies and marketing. If you're in marketing and you're in that creative aspect, depending on who your clients are, you're also going to have some issues. So I've had probably currently to date, I've had 8 of my clients that have been laid off, and they're in marketing. And so they contract with Adidas. Well, Adidas's production and manufacturing got a huge hit at the end of 2019, and their sales was down 80% first quarter. When I saw that, the first thing I thought of was, I work with a company called Camp Grizzly, and Adidas is their biggest client. So when I saw that news, the first thing I thought of, how is this going to impact Camp? And sure enough, they laid off half of their workforce. 8 of those were my clients. Now, I made sure that all my clients had emergency funds, so they're all going to be okay. But I would say anything that is specifically directly related to hospitality, restaurants. So again, if you are a food distributor or alcohol is always going to be fine. In fact, the recession, that's where they saw tremendous heights. And I think that I work with 2 liquor stores. I do their benefits, and they're up 300%. So there's certain industries that are going to continue to do really well. I do think that retail stores are also going to be impacted, but I also think that there's going to be a lot of pent-up consumerism that's going to come from that retail as well, if they haven't already during this time had a very good web-based platform that they could sell. So again, with some of those retail establishments, can they then move that online and then have an Instagram web focus versus the store? Maybe they're realizing that their business can actually be more productive that's web-based. So I think that the main thing is, again, I don't know, but any of the retail and restaurants and hospitality, any of those things, I think really are going to be impacted in any businesses that are directly correlated with those. So it's a time to, again, it's a time to innovate as well as diversify. And I even know that from my own standpoint, it's opened up my eyes, because again, I work with a lot of people in real estate and creatives, and I work a lot with the gay community, and that is just any industry because gays just do everything. But when I look at that, I started thinking, well, crap, if there's a drop in the housing market, how is that going to affect my business? Because I have a lot of my clients that are in real estate. So it has me thinking about, how do I diversify my own business that is not just sector oriented, or because I've created a niche in these industries, but then how does that really impact me long term? Do I need to start diversifying my client base a little bit more that's sector related?
And I'm going to tell you, we have 11 minutes.
What's that?
We have 11 minutes and 5 more questions.
Okay. I have more than 150,000 in home equity. Would it make sense to access some and invest? I definitely think that it makes sense to access the home equity, even if you leave it untapped, but that you just have it, that you're locking it in a low interest rate and able to get all of those pieces. As far as to invest, if you feel that your if you feel that your job is stable and your income is stable, then I have no problem taking equity out of one asset to then invest equity in another. But right now, if you feel that your job, if your income is not stable, then what I would really look at is making sure that you have those reserves, and then just be okay with whatever the investment. Be okay with locking that money up for, again, 5 to 7 years. Let's see here. Another thing. Return monthly. What smart way to explain the benefit of donation? I don't necessarily know all the donation laws just yet, as far as on what you can do there, but I will send you that CARES Act. And again, there's just, for me to speak on authority of it, I just don't feel confident, and I don't want to give you the wrong idea because I'm not a CPA or tax accountant. Do we have any idea how the recession will impact commercial real estate and lending? So I think I hit on that point already. I do think that there's going to be opportunity in the commercial lending space. And again, I don't know for sure. That's just my prognosticating on it. But a lot of business owners that I'm talking to are really starting to look at, do I need this much space? I know, at least for me, that I started thinking about that primarily because I've been able to have more meetings more virtually and people are more willing to meet because they don't have to drive and meet me downtown. And the other piece is I don't then have to pay for parking. When I look at my own business, I pay about $10,000 a year just in parking because I validate all my clients' parking. I pay for my parking. I pay for my employees' parking. So just me and my employees is about $700 a month in parking. So when I look at that, okay, well, if I don't have to pay, if they don't have to come, that already saves me money. I already got a raise just by not doing that, which is why I feel commercial real estate is going to be impacted, because people are seeing, well, maybe I can get this all done with this, so, if I can pay my employees more because I'm not having to pay their parking, like, why wouldn't I do that? I'm already used to not having the money, so I'd give it back. But it's one of those things of, if you don't need to pay rent, how does that change things? The opportunities in more near term for more lasting changes, student loans refinance. Yes. Okay. So if you are currently, I didn't read the question out loud. Sorry. Are there any opportunities in the near term for more lasting changes to student loans, like refinancing at a lower rate? Yes. So I work with a banker at First Republic, and with First Republic Bank, they're nationwide, but they have one location here in Portland. I used to always refer them business all the time because I liked their lending programs, and then finally I got someone, so I was like, I send you all the business. It'd be great to just have someone that they could go talk to. But with First Republic, if you have a credit score of at least 720 and you owe at least $60,000 in student loans, they will refinance it. And I've seen rates as low as 1.75. On average, most of my clients have gotten 2.3, 2.5, somewhere in there. So if you are in a position where you have a rate that's higher than that, I would say if you're 6 and above, you should refinance. Also, SoFi also does student loan refinancing, and it's a specific student loan, so it still has the protection of different income-based repayments. Or if you lose your job, or if you switch, you can not pay for a little bit. So it does have all the rules and laws that come along with student loans. SoFi does as well, because the main thing is you want to get a student loan refinance. You don't want to just get a loan, because then you lose all the protections that you could defer payments or do income-based repayments. If you do have one of those loans that it's okay, well, I can get it forgiven after a certain time period, I will tell you, I've been doing this a long time. I have yet to meet anyone who has had their student loans forgiven, and I have been working with people who are in that same time frame, and it's always another thing. So the laws can change, but I really don't have a lot of confidence in the federal government when it comes to these programs. The student loan, loan forgiveness, the other people need to really realize is, though that loan is forgiven, you now, it's treated as taxable income in that 1 year. So you're still going to have to pay it either way. At least with student loans, you have a payment plan and you can deduct the interest up to a certain income level. If you now owe the federal government like $60,000 in taxes, now you're just going to have another payment plan that you can't deduct the interest and you can't refinance it. So again, happy to do it offline to go into more detail around that. And then last question here. Hang on a second. If the stock market is down, is it the time to invest compared to paying off debt? So if I have if I have 2,000 and have 4,000 at 0%, am I better to invest? Honestly, right now, I would stop worrying about what I could make in the market, handle cash flow, because I do not know how long this is going to be. And we are in for a long road, similar to 2008 and 2010. It's going to be a slow build. So again, if you are in a place of privilege, and I don't want to deny that, again, there's a reason that I can still keep my employees, we're not all in the same situation, so we're not all in the same boat, but we're in the same storm. So right now, it really is cash is king. Assets are soft and squishy. Debt is hard. Cash is king. So maintain your cash and your liquidity positions. Manage your debt in the most efficient ways possible. So get them to lower interest rates. And then with your assets, just know that they're soft and squishy. So whether it's your house or whether it's the stock market, you're going to see some ebbs and flows in how much it's worth. So be okay with taking some of that off the table. So if the market is up, and even though it could go higher, are you okay with maybe taking some of that out of the market right now to build up your cash and liquidity positions? And I'm not talking about in a 401k. I'm talking about if you have like a Robinhood or a Betterment account or E-Trade or something like that. Are you okay with capturing some of that equity to be able to shore up those reserves? Because the market's going to do what the market's going to do. And even if you didn't get that where I was showing after the stock market crashed and after a month later it went up 7%. Well, if you put it in a month later and it went up 11%, well, you still then got 5% by waiting 3 months. So don't worry about how much can I or can I not make. It really comes down to, do you have enough money to live? And do you have enough money to live for a longer period of time without having a guarantee of things? So if you have money to play in the stock market, then yeah, like call me. Like I will help you invest money in the stock market. But if it's a difference of, I have $10,000 in the bank, should I put $2,500 in the market? Absolutely not. Keep it in cash. Your peace of mind is worth so much more, and you will be making better financial decisions by having that cushion there than it is, can I make some money off of American Airlines and Hilton right now? Like right now, it's really about handling what you have right now in your own financial situation. And again, I am certainly so happy to figure out how can I help you. So again, I'm not pitching product, but I am pitching me. Should you want to sit down with me and do a call or a video conference, please know I'm not a fee-based planner. I am free to talk to. And whether we ever do business, right now, I really just want to help impact the community that I love. And I am one of your sponsors, and I'm sponsored because I love you guys. And I already have clients within that. You're my people. So if I can just help ease some anxiety from a conversation, help you make some decisions within what you have going on through work, please use me as a resource. I have no problem. We don't have to work together for me to help. Does that make sense? We just have to time it well on my calendar. And I'm blocking out large portions of time where I'm not doing as many client meetings so I could do more things like this, so I can have more engaging conversations. I'm going to ask this last. Past recessions did a good job of easing. Do we have examples from past recessions on businesses that did a good job on easing public fear and bringing folks back out to entertainment events? Yeah, I think that, so I'm trying to think as far as specific examples on, companies. But I will say you saw a lot of people, and you're already seeing it now when things are crazy, there are companies that come up and step up and do what's right. And the weird part about what's going on right now and what's different between now and September 11th, which I keep coming back to as the most similar, like hanging around lots of people. People are hungry for social contact. And so when people are so hungry to support those small businesses. And so I think that as long as companies integrate some social distancing, so if it's going to a derby game, maybe there are sections, you know what I mean, where people can still be with their families and their friends that they're already not social distancing with because they all live together. But I think we need to really be mindful of how many people are we letting in, and then can we now watch some of these things live streaming? Can there be subscription buy-ins so companies and organizations are still getting the dollar commitment and the support because people want to support those communities and those organizations. So, and they're willing to do it. And maybe the commitment was like, I haven't been able to come to some of the games because, the time commitment of what I have to then do out of my practice to what I have to do. But if I don't have to drive somewhere, get set up, and I can just like look at, come in for like the first half of something, that's a lot more doable for someone like me and still pay what I need to pay. So I think that really, again, innovation right now is so important and community support is so important. So it really is about being vulnerable and reaching out to experts such as myself or people within your community to just, what can I do to support? What can I do to help? Because that's really where you're going to see, again, during times like this, the good is magnified and so is the greed. And right now, even the greed is realizing without the good and hard work, not only will they not be able to be as greedy, they won't be able to function. Because if we're a consumer base and we have no money to buy their things, guess who's going out of business? And if they make all of their money in the wealth of the stock market, which 50% of people only participate in the stock market, if those companies not doing well, neither are their stocks. So they're realizing that this is a global community, and that's where it is on that higher level. But I think that the action right now is what can you do in your own personal community, both in your own personal finances and also both in what you can do as a community that you are, the Derby community, the restaurant community, all of those things. Where can we give back? And if you are in a position of privilege, keep paying. I pay my housekeeper and they're not cleaning my house. I'm paying my, personal trainer because I want them to stay in business and I can afford it. And I'm eating a lot of macaroni and cheese, so I'm going to really need that personal trainer when I get out of this. Pay your hair salon. Pay your nail tech. If you are in a position of privilege, it is time. It's not just about donating money. It's about continuing to make those investments because they are investments. You're investing in your community and you are getting a return. So look at it that way as opposed to I'm paying something and not getting back. Screw that. If you are in a position to pay, do and do more because the people that are not, they're going to need us. All right. And I'll end it there. Thank you.
Thank you, Charlene. Wonderfully done.
All right. So hopefully I'll talk to you guys soon. Enjoy your day.
And Mean wanted to give you a plug at the end, but I don't think I set up the video that way. But obviously everyone thought you were amazing. And
okay,
we love having you. And I can't wait to see how often and broadly this video is going to be shared.
Oh, awesome. Well, thank you guys really so much. And feel free to stop by my website. There's even just like stuff you could look at. It's planningwithcharlene.com.
Cool. Thanks, Charlene.
Bye.
See you later.
Bye.